Hello, I'm Tammy Green, and this is your Week in Forex from UFXBank. Today, we will review last week's market highlights. The new financial reform that Obama is looking for has put a lot of pressure on Wall Street. This reform will increase regulation and may cause market declines in the long run. His speech was part rebuke and part olive branch to Wall Street, but mainly it was a sales pitch to the American public to back stronger reforms. The euro fell last week against the USD after more bad news about Greece's budget hit the newsstands. Forecasts are worse than expected. The CAD is continuing to make gains against the USD, and many bet that the BOC will raise interest rates before the United States. Today we'll review these and other issues with financial analyst Martin Smith. Welcome, Martin.
Thanks, Tammy.
So what is the news out of Greece? I heard that the euro has really taken a hit in the market.
Well, the euro certainly weakened against 13 of its 16 most traded peers, as news from the EU showed Greece's deficit was 13.6% last year and higher than the government's April forecast of 12.9%. Bad news for Europe and the euro, I'm afraid. The dollar pared its loss against the yen as reports showed US producer prices increased in March more than economists expected. Europe's single currency has weakened 6.8% against the dollar this year on concern that Greece's difficulty in containing its budget deficit will spread. Ireland has now overtaken southern European nation as the EU's member with the largest deficit at 14.3%. Now, Greece's Prime Minister is likely to cut or delay payments to bond investors, even as the country negotiates the terms of a rescue package. The nation's 10-year bonds fell for an 8th day. Now, Greek bond and credit default swap spreads remain elevated, and those of Portugal are rising in sympathy. Well, given the apparent lack of urgency in finalizing the details of the bailout plan, we can see troubled times ahead for the euro.
Last week, we saw the Securities and Exchange Commission file a lawsuit against Goldman Sachs. Could you tell us a little bit about these fraud accusations?
Well, the SEC alleged that Goldman failed to tell clients that complex mortgage-related securities they were buying had been created by billionaire hedge fund investor John Paulson, who stood to benefit if the securities lost value. Paulson has not been charged. Now, these civil fraud charges against Goldman Sachs concern complex investments backed by mortgages that many blame for worsening the financial crisis as the US housing market went into a nosedive. However, Goldman is vehemently denying these charges and claims that the charges are politically motivated.
Well, whose politics are allegedly driving these charges?
Well, Obama addressed the US last Thursday about financial reform for Wall Street. He and many Democratic leaders are really pushing to get legislation on financial markets through Congress by next month. It will take time for the Goldman issue to be solved, and this may keep stocks in a downtrend. There seems to be a downside risk for cross currencies against the yen.
Tell me, how is Goldman Sachs handling these accusations?
Well, from all reports, they are aggressively denying these allegations and doing major damage control with their clients. They seem eager to fight the case in court, and as I said earlier, they see this as a political issue, as if someone, in fact, is trying to prove a point.
It seems that the loonie has continued to make gains against the dollar in the market.
Yes, the CAD reached the strongest level against the US dollar in 22 months. Traders raised bets that the Bank of Canada will increase the loonie's interest rate before the Federal Reserve can raise interest rates for the dollar. This has not happened for 8 years. Now, the loonie has been rising as the International Monetary Fund said Canada's economy will grow the fastest among the group of 7 countries in 2010 and 2011. Now, keep in mind, though, that oil is going down, and that's not particularly positive for the Canadian dollar, as it's a commodity-linked currency. However, it's still sitting at very strong levels.
Do you have technicals for us for this week?
Yes, let's quickly discuss the euro-pound. The pair saw a break of the 87.03 level, which was its April low last Wednesday. Now, risk of further weakness is very likely. If this is the case, a break of the 86.56 level will clear the way for a run to its 2010 low at 86.01. Now, to reverse its current downside weakness, the cross will have to return above the 88.64 level in order to create scope for a better recovery towards the 88.84 level. Now, that level should reverse roles and provide resistance, thus turning the cross back down again. However, if a breakthrough does occur, the euro-pound should head higher towards the back of the broken rising trend line at 89.31. All in all, the cross remains weak and vulnerable.
Well, thank you, Martin, for joining us again this week. Until next week, I'm Tammy, and be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can follow us on Twitter and Facebook to submit your own questions to our weekly broadcasts. Please email your questions to Martin Smith at askthebroker@UFXBank.com.